Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. New York coffee. Right, once again, I know that we have exited out of the original possible February to late May diamond pattern. And I know we initially broke on the downside, but then 2 weeks ago we broke back up on the upside. And that all in all, we've spent 3 and a bit weeks outside this original pattern, and as yet we have not really found a direction to go. But I ask you to bear with me on this possible lopsided diamond pattern for a little longer. And for the moment, look at it as a possibly false break both below and above. Now additionally, I have drawn a second flatter but also lopsided and effectively larger January to date diamond pattern, which includes this recent action. This was breached on the downside and topside, but is sort of still intact. Currently it's 180.115 to 184. So what can we say about the most recent actions? Well, we have some pretty good supports below, but you would already know that from back in March. We have the following: the 2016 high at 179.55, the influential neckline, currently 175.45, of the January 2020 to April 2021 reverse head and shoulders bottom, and the congestion, well, quite a lot of congestion below between 174 to 74.5, containing the August 2021 low at 174.5 and a 50% Fibonacci line of the May 2019 to February 22 move at 174 even. As for the resistances above, they seem limited. We do have the rising medium moving average, currently 182.05, the 2015 high at 187.40, then the interesting lesser Fibonacci at 195.40, and less so at 197.05 before we reach the combination of the November 2014 high at 201.35 and the 50% Fibonacci line of the February 2020 to January 23 move at 201.70. That capped this year's rise. Now, one further ingredient to throw into the mess. As of last Thursday, we have what could be seen as a bow tie formation of the rising medium moving average and the declining short and long moving averages. Currently those two are at 181.25 and 181.5 respectively. They are seemingly in no order nor indicate any direction, but they did cross over, so it's worthwhile paying attention to them, especially as, if it is true, we might see a resultant move between the 6th and the 13th of July. London coffee. Once again, the key pattern here, and the one that's been running this market higher since mid-March, is the January to March bullish Andrews pitchfork, which is highlighted in dark blue on my daily chart. The market has been running around the middle tide, currently at 26.93, and interestingly, we've not seen any action at the lower tide, currently 25.23, nor the upper tide, currently at 28.63. Thus, the theory behind the Andrews pitchfork suggests this to have been a near perfect indicator of the bullish angle of attack for this market. The most recent action, 2 weeks ago, has seen the prices punch up through the June 2011 high at 26.41, the March 2011 high at 26.72, and even the all-time limited March 2008 high at 27.04. Unfortunately, my charting system does not go back any further on this commodity, otherwise I'd put those on as well. But last week was the highest we've seen prices in this contract for 15 years. A second consecutive week of doing that. Until something else crops up, the trend is your friend here, and the January to March bullish Andrews pitchfork is the key to the market's actions until it is broken. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.